Hello, hello. Welcome, everyone, to the closing playbook for Tuesday, October 7th, 2025. I always know the date, and I still look at my clock anyway, just to make sure I don't mess it up. I hope everyone's having a good day. Hope everybody's trades are going well. And we're going to get started in just a couple of minutes. All right. Let's see what we got going on here. Let's see. Pete from the Netherlands. Can you tell me if am I pronouncing your name correctly? Is it Pete or is it Piet? We say it occasionally on the air, and I don't want to do you an injustice by mispronouncing your name, but I admit ignorance. All right. Let's see. Price of the SPY option's gone crazy, huh? Where is the SPY right now? Let's see. No sound. Refresh browser tab. As always. Doesn't look like the SPY is going crazy. It's kind of right where I left it. Ike, you want the link to the calculators? Are you in the $1 opening playbook membership? Because that would be the best place. The link to the calculators. Let me get you the link to at least the opening playbook membership area. Hang tight a second. Welcome, everybody who's just joining. We're going to get started for real in just a minute or two. Nathan's having some technical difficulties. Trying to get his camera and mic to work all of a sudden. Let's see. All right. Link to opening playbook. So, Ike, if you go into the members area, the app.oneclicktrading.com, and go to the opening playbook members area, you will see the opening playbook debit spread target assistant, and that's the latest and greatest of the calculators. So let me post that in here. Let's see. So Ike, this is the link for the calculators or the calculator, the latest calculator, but you'll only be able to use that if you have the $1 VIP opening playbook membership. If you don't, then you can go into the links down below, the helpful links, and you'll see the $1 playbook VIP membership. It's literally $1. There's no catch, and you get access to all the stuff that's in there. Yeah, Catherine, sometimes certain brokers will close out the spreads because they don't, as they're approaching expiration, because they don't, their automated systems, they can see that you don't have the stock to cover the one you sold to open, and it just doesn't automatically recognize that you have an equal an opposite option to buy the same one that's going to expire at the same time. And they cancel each other out. And if you called your broker and they looked at it, a human looked at it, they say, no, it's fine. You don't need to do anything. But then their automated systems will send out warnings that you have something that's about to expire and you don't have the stock to cover it. And then they'll automatically close you out. And we've been kind of fighting with this for quite some time to try and get them to get their automations to recognize not just owning the stock, but owning another option in the same spread that's going to cancel it out. So we're all dealing with that, but different brokers have different rules about when they're going to close you out and when they won't. Hey, Nate.
Hello.
Figured it out, huh?
Kind of. My audio is still coming through in weird places, but we're closer.
I'm still hearing you in my ears.
That's good. Hopefully everyone else is also hearing me in their ears.
Yeah.
I have no idea why restarting my computer made that work. It doesn't make any logical sense to me, but we'll go with it and hope for the best. How's everyone doing?
I haven't seen anybody say anything terrible, so I'm going to say good.
So not terrible. I did see someone who said they were red on the day, and I won't be one of those experts who say, "Oh, well, then you must be doing something wrong." I so much money today. I will say I am also red today on the active side. My portfolio account had actually a pretty good day in spite of it being red, but that's mainly just because AMD had a little more pop left in it. And then Progressive, which I've been painfully holding, which has mostly been down, is actually up today. So on that side of things, moving in the right direction. But my active account, after having one of my best days ever yesterday, actually, is definitely red. Overnight options not looking like it has a lot of life in it. And so we're riding the struggle bus a little bit today. But as far as how many days have been really, really green in recent memory, I don't think you should be too disappointed about that. It actually goes back to what I was saying, if you guys remember 2 weeks ago, which is that I'd much rather be aggressive when the market gives us the opportunity to be aggressive and then take some lumps, have those situations where one out of every 8 days you take a little bit of a hit and just be like, hey, the net of that is really great. And so hopefully that's the position you're in. If you are in a position where one red day is wiping out 2 weeks of good opportunities, then that's the different situation. And you need to evaluate kind of what you're doing at that point. But if it's just, hey, today's a red day, sucks. But over the last 2 weeks, it nets out to a really nice positive return to your account, which should definitely be the case, folks. And if it's not, then I would take a little bit deeper look into that. But don't be bummed. Red days happen. If you're like me and you're, being pretty aggressive right now, mostly to the bullish side, well, then most of the red days in the stock market are going to be a red day for you as well. I would encourage you, don't buy into that idea that you'll hear some of these like quote unquote professional traders tell you, hey, it doesn't matter what the market does. If you're doing this, that, and the other, like always, like, no, if you're in the market conditions like we're in right now and you're trading aggressively because the market is bullish, usually when the market's red, you're going to have a red day. But what we're doing is we're trying to both accent the winning and minimize the losing, right? Because if it was just literally green day equals green, red day equals red, well, then you might as well just buy as many SPY shares as you can and never attend an opening or closing playbook session. We're trying to accent our winning opportunities. We're trying to minimize our losing. We're trying to turn break-even days into positive days. But when the market flushes, 0.5% or 1%, you're probably going to be down on the day if you're smart enough to be having been aggressively bullish for the last couple of weeks, which I hope you have been. So don't buy into all that hype and nonsense about like, oh, you should always be turning a winning day in no matter what the market's doing. That's silly.
And if I could add one thing to that, what I've learned over the years is when you do get the winning days, it's good to celebrate the wins because we don't celebrate stuff often enough when things go well. But keep in mind on those days that the loss hasn't been taken out of that yet. So, the strategy might average a 15% return and you might have just gotten a 30% return. But that 30% return is the return on that one win. It's not the return with the losses taken out and what you expect overall from the strategy. So just remember that. So when you get that loss and you go, oh man, I lost all whatever. It's expected. You need to remember it's expected. The losses are expected, so they don't hurt as much when you know they're expected.
Yeah, absolutely. And so for some strategies, I think Don was asking the question, okay, but what about if one loss does wipe out lots of wins? Well, some strategies, wins will wipe out, or a loss will wipe out a win. They'll equal, one loss, one win. Some will, it will be opposite, where one win actually makes up for 3 or 4 losses. Other strategies like override options, it's reverse, right? One loss is going to equal 4 wins or so. So you have to be batting 85, 90% to be super profitable. As long as you understand those metrics, you know those metrics, and like Dave just said, you can average them into your trading, I think you're good. It's when you're totally shocked and you give up because you took a loss, when it doesn't really make sense for the metrics, that I get concerned about, folks. So that's my spiel for the day. Let's take a look at where the market is at today. A couple things I think worth noting for where we're at right now. So here is just our sector view for the day. Sorry, I was taking a second to add it to the stage there. There we go. Or maybe still taking a second to add it to the stage there. There we go. This is our sector view for the day. You can see earlier in the day, if you guys remember, staples were actually near the bottom of our list. They've rebounded as some selling pressure has entered the market. So I don't know how many of you guys were on opening playbook. I said staples and discretionary, XLP, XLY, were both near the bottom of the barrel, which is weird. Usually they're very divergent from each other. Well, fast forward 5 hours, they are totally divergent from each other, and staples have picked up some steam with the selling pressure. To me, that actually, I look at that more as a discretionary buy the dip opportunity than anything else. Tesla's down quite a bit. We'll talk about that as one of our buy the dip opportunities. The rest of the market is not great. I mean, technology slipped down, and industrials, which were really strong, slipped down. But we're not talking about extreme sell-offs. Really, it's just discretionary that's been aggressively negative for the day. If you just simply back out to 5 days, you'll see a lot of the same trends, but with one important flip, which is technology has been really healthy. So I think that's the one that, again, is going to be the biggest driver right now on red and green days. And we saw technology kind of holding up the market for the first half when everything else, not everything, but most of the rest of the market was fairly weak. We saw technology holding it to the green side. And then as technology fell, the whole market turned red pretty quick. So this is going to be our needle mover. And over the last 5 days, still quite a bit of momentum here in technology. Of course, AMD jumping 30% yesterday doesn't hurt that. Now, just to give you a quick look at the kind of heat map, if you will, it's an interesting day because we're not actually that red. I mean, we've got a lot of red in here, but you guys know usually on a 0.5% day, if you look at a heat map, it's like all red and like a few little spots of green. If you ever looked at the heat map before, we're not really in that environment right now. We do have some red. Semiconductors obviously took a decent hit. Like I said, a lot of the consumer stuff took a hit. Technology, 50-50 or so. But we've got a decent amount of green in health, decent amount in entertainment. Industrials is pretty 50-50. Staples mostly green. Utilities more green than red. So we don't actually have like a blanket red day here. We just have a couple drivers to the downside. So for me, I'm not going to draw a whole lot of conclusions into that, except to say, hey, we're not in like a full-on liquidity flush. We're just seeing some things, transfer and balance out. Nothing too crazy as far as where the market is hinting. We're not seeing like, okay, everything technology related is down 2 to 3%, and we're starting a flush there. Now, I'm going to say, let's go ahead and look for those opportunities to buy the dip, because 2025 has been a pretty aggressive buy the dip opportunity. It's actually been like the best market in 20 years or something for buying the dip. But I do want to add a caveat. I'm going to do this with defined risk, low risk trades, little debit spreads we'll go through. But I do think we're in a little bit of danger here for a potential couple day correction. I don't think we're getting a big pullback or anything, but 2-3% wouldn't be that crazy. And really the reason that I'm starting to be a little bit concerned is just that everyone else now seems unconcerned. For the last month, as everyone's been saying, hey, we're overextended, pull back. You guys heard me on the round table and others say hey, I'll be the one who just says, nah, buy the dip, all-time highs, momentum, like let's just be aggressive. And now it seems like kind of everyone is saying, hey, market turn the page, we might as well go with it. It's just going higher. And now I've started to think, well, now that everyone's saying that, maybe I am a little more nervous here of a potential, fade. So I'm not saying that I'm starting to hedge and get like super nervous about that. But it wouldn't surprise me now more than ever, because everyone does seem to be flipping, that we might get a 2 or 3 day correction, maybe get a couple uglier flushes. Just be careful. And I think the easiest way to manage that is to follow the mechanical strategies like I always do, ignore all the noise. And then if you do want to trade some things like I'm going to trade today on the buy the dip, small contracts, risk defined, don't go crazy. Don't start, getting too aggressive at exactly the wrong time. Okay, so our buy the dip stocks that I have right now, if you guys have any that you like, you can let me know. I'll take a look at them. But the ones that I like right now are IWM, small caps overcorrected to the downside over 1%. Man, it was like 1.2. We already missed 0.2% of buyback opportunity. That's kind of annoying. Also, Oklo. A lot of the nuclear stuff still been really strong, but Oklo is weak today. Look at CCJ, look at UEC. Those are strong. Oklo is weak. I like to buy the dip there. Of course, I'm going to say Bitcoin. Bitcoin took a nice 3% flush today after absolutely being on fire. Of course, I'm going to say let's look for a quick bounce back on Bitcoin, buy the dip opportunity there. And then Tesla down 3.5%. Right now, it's been a juggernaut. I think people are a little ahead of that news for Tesla. So we're I think as good of a buy the dip opportunity on Tesla as you'll really get on any stock, just because it's been so resilient after those big red days. As a matter of fact, if you go to a Tesla daily chart, let me share it with you. Let me just show you how crazy this has been on Tesla here real quick. Share window, boom. There it is. Okay, here's Tesla. Let's go back the last couple months on Tesla. Notice really ugly red candle here. It closed at 435. We touched 446. That's an $11 move the next day. And then 1 day later, 453. So within 36 hours, we were about $20 higher. Red candle before that closed at 422. Candle after that closed at 440. It's almost $20 higher. Before that, closed at 425. Next candle closed at 443, about a $20 move. Candle before that closed at 416. Next candle, 426, about a $10 move. Candle before that closed at 409. Next candle, about 421, about a $12 move. Here we got a little bit of chop sideways, but even if you just took one here within 3 days, we're $30 higher. So it really wasn't until all the way back here before we really started breaking out that we've had a single, multi-red candle day. In fact, literally not one since this breakout, other than this one, which almost doesn't even count because of the way it gapped and still finished, or at least touched about $20 higher. So there really hasn't been a better immediate buy the gap opportunity than Tesla in the last couple of months. And so I'm going to ride that horse while it's hot, see if we get another one. Even a pop up into the $450 range here would be about a $13 move on Tesla. I'll take it. So how do we trade this? Well, like I said, risk defined, couple days out. Let's see if we can get a pop up near that 450. We're not going to trade all the way to 450 because we don't actually want to require to finish above. But let's say 442, 445. That's easily over 100%. As a matter of fact, you could go up to the 447.50. That would be just on the chart. That would be here, okay, right at the top of the body of the candle. But I'm going to make it a little bit easier and go for 445 right in the middle of the candle. So how would you do that? Right here, October 10th, buy October 10, 442.50, call, sell October 10, 445, call. Debit there is about 95 cents. So you have about 150% return, but just go ahead and throw a target if you want on this one for 190. That'll be a double up there if you get just to buy the dip anytime in the next 3 days. I'm going to do very small risk. You can see here, I am looking at, there we go, 95. Boom, filled instantly at 95 cents. I just did 2 quick contracts. I'm literally risking less than $200 on this one. Like I said, small size, just taking some stabs here with defined risk. Okay, let's go to IBIT. Big old flush today in IBIT. I erased about $10,000 or $12,000 worth of my gains that I started from September 30th. So that's kind of annoying, but I do think we're going to break right back to the upside. If I had to guess, it seems just like an overflush to me. And again, we don't need to get to new highs tomorrow or Friday. Let's just trade it to kind of the midpoint here, right back above 70. Okay. So October 10th, just trading it back above 70. I'll do the clean $1 spread. That's a $69, $70 spread there. So let me go ahead and type that one in. Still about 100% ROI there for IBIT. IBIT 69. These are all going to be October 10th, by the way, because we're just going to trade this week. We're really, what we'd love to see is the bounce already happen tomorrow and be out of the trades by tomorrow, if we can, but we're willing to hold it to Friday if needed.
I was explaining to somebody this morning also, like, that's also why you don't want to get, if you're going to set a target, don't get too crazy aggressive. You can't just go 10 cents under the 250 on the first one or something like that, because it's never going to be worth that a week out, even if it goes up.
Yep. Okay. Then let's do Oklo. Oklo is next on my list. Like I said, a lot of the nuclear stuff has been strong today, but Oklo was weak. For example, take a look at CCJ. Up 1.6%. UEC up 3.4%. So these are actually all bouncing. Oklo lagging behind. Let's play Oklo to catch back up. Maybe into the 140 range here over that same date. Let's see, 139, 140. Not a great number there. I don't want to trade a 3% move at a 50-50. That's really bad pricing on Oklo. 141, 142 would be more like 200% but that's above this candle or right at the top of the candle. I don't love the pricing. I'll throw this one out there, but guys, I'm going to give you a limit that you probably won't get filled on. Does everyone understand why I don't want to trade Oklo at 50 cents when we needed to make a 3% move out of the money? It should be like a 150% type of return, not a 50-50 coin flip. I'm going to give you the trade, but my guess is you won't get filled on it, because I'm going to say a debit of 35 cents so that we can get easily over 100% on a move up. But the chances are, just based on the mid price here, we probably won't get filled. Or maybe we will, because, well, boom, how about that? I lied. Filled instantly at 35 cents. All right, well, there you go. It was showing a mid-price of 55 cents moments ago, but there you go for 35 cents. So that's a much more reasonable price. Okay, so we don't want to trade something that we're requiring the stock to move up in our favor, and it's giving us basically wrap order pricing. It's giving us at the money prices when we're trading it out of the money. That doesn't make sense. We don't want to trade those. But Oklo thankfully did come back down and was filled for 35 cents. Okay, then we've got IWM.
The announcements, by the way, folks, if you miss them going by.
Yeah, you can just scroll right below the video, because I do sometimes ask questions and blow up the chat in the middle of this. IWM, guys, same exact thing here. Got the 1%, filled the gap. Let's just trade it for a small move right back up above 255. Should be about a double up opportunity there to get up to 245, 246. Let's see. Pretty good. Pretty good. Keep in mind, IWM, SPX, QQQ won't be as good at pricing because they do have an inherent long bias. So they won't be quite as good as the individual stock, but IWM, pretty good here. And again, these are all this Friday. We're just looking for a quick bounce. Ideally, we'll get the bounce tomorrow and we'll get a head start on this. We're not even going to have to wait until Friday if we get a nice big bounce tomorrow. But if we don't get the bounce tomorrow, then we'll wait. 42 cents there on that one. 42. And that would put our target at 84. All right, there you go. We're having a little bit of a shotgun Tuesday here on the buy the dip, but so far 2025 has been a great buy the dip market. That doesn't mean that tomorrow is going to bounce, guys. It's just saying, hey, when the market is moving this aggressively, you get a little bit of outsized return to buy the dip when you use this kind of trade structure. A couple dollar move, which is very typical for a lot of these stocks, can pay 200% pretty easily. Carl, if it's giving you a net debit of 357, I wonder if you went too wide on the strike. Do you have a $5 strike instead of a $2.50 strike? Now, sometimes the screen is a little bit blurry, especially when the option chain is small. Like Dave said, you can use the 1080p. That will give you some extra screen exposure. But also, that's why we post the trades in the chat, so that you guys don't necessarily have to look and see the numbers in real time to find the right trades. You can go to the announcements or the chat thread there and get the exact trades. Okay. Any other questions about our buy the dip? Carl, I forget what broker did you say you run? Schwab. Well, I'm on Schwab, but it gave me that price. That's kind of weird.
Check the expiration.
I mean, even at a longer expiration, it should not give anything near that. So that's kind of odd. But did anyone else have other tickers that you wanted to look at for a potential buy the dip? Of the indexes, I mean, I always trade SPY, so I'm not including that because that's just one that I trade mechanically anyway. But I think IWM is my favorite just because the size of the dip and the fact that it filled that gap perfectly, I think sets it up pretty nicely. And yes, I did do a target for each one. Yeah, we didn't really have any technology here. I mean, Tesla, borderline. Oh, wow. AMAT did take a rep down, 5.6%. That might even be a little too extreme. I don't mind that one if you want to be aggressive, Des. That one's almost maybe a little bit too aggressive on the buy the dip side. BMNR. I've never traded this. Tim, what is BMNR? BMNR. I have that right? One of the miners. Is that what that one is? Let me look at Amazon real quick. Amazon's actually up today, so not really a buy the dip in the traditional sense, but it is in this rangy motion. I actually don't think Amazon's a bad play right here. This is like the really delayed trying to build some support. It seems like on Amazon here. If you look at it, it seems like oops, wow. It seems like ignore that arrow. I don't know what I'm doing with that, but it seems like it has been trying to get something going here for a while and has built this secondary base right on top of the 220 level, which historically has been a good level for Amazon. And obviously, if you go to the weekly chart here on Amazon, you can see we're still lagging behind the highs quite a bit. We're still $21 off those highs as we speak. So I like Amazon, probably not as much for a tomorrow trade as like a December trade. So Amazon, I really like, maybe like a 235, 240 December trade. If we take a look at it, you could probably get a pretty phenomenal risk reward there. Here's December, 73 days out. At 235, 240, you're going to pay about $1.60. So you're going to have, over 200% ROI potential on something like that. That's probably more how I would trade Amazon. STX. Oh, wow. That's a big dump as well. Yeah, STX. This almost looks like that other Oklo run that went crazy or that open chart. I don't know what open did today. Another, kind of maintaining the pop to the upside. STX and AMAT are probably a little too aggressive for me to trade the buy the dip, but certainly you could if you wanted. If you're going to trade one of those, you might as well be super aggressive and go for like a 300, 400% ROI kind of trade there versus, trading anything in the middle. I wonder how Graham's hood is doing today. I haven't actually looked at it. Hood, just a little pause bar there, actually. If you look at it on the daily, that's the week. Yesterday obviously got hit, but today kind of a little pause. Hood looks quite good. Let's see. We only have a couple seconds left. I have 30 seconds left. How quickly can I get a hood trade in here? And I know you guys are a little bit delayed behind me. Not great. Not great pricing there on hood. See, it did fill though, 48 cents. That's a double up on hood. I'm a couple seconds away from the bell. Hood, I think, is an interesting one. Kind of a pause bar. Probably a little bit late for anyone else. That's the bell to get in on that one. So I kind of sneaked that one in there. But little pause here right on that 144. Of course, looking at this chart just reminds me of this pullback when I said, hey, if it gets down to 100, I'll definitely buy a whole bunch of hood. And well, it hit 95 and I never touched it. And here we are at $153. So isn't that just perfect? Those are the ones you regret. But like I talked about, guys, those are also the ones that I don't think that you want to get, revenge trading on. Not to say that you want to short it either. This is the thing. I'm going to keep saying this over and over and over again, guys. I'm not saying be short. I'm not saying pick tops. I'm saying trade it on the in-between. Reasonable momentum, base trades that are going to have normal targets, normal expected moves. I'm not saying short the market, but I'm also not saying pile on at the tops and try to, recover for stuff that you wish you did. Jim, I don't think you can trade any of these until 4:15 except for the indexes. As far as I'm aware, at least I could be wrong if they've opened it up to the other ones. As far as I'm aware, we cannot trade any of the individual tickers through 4:15. Lynn, no, I probably would not double up on it, to be honest. I think you're just kind of mirroring the same trade. So I would not necessarily do that in that situation. Yeah, Sean, it's a great point for Amazon. The seasonality, I think, will probably start to show up in a big way. And if you looked at Amazon's recent reports, they basically said their efficiency, their use of AI, their margins are getting better every single month. And so when that plays out over this Christmas season, I would expect that Amazon will put together some pretty phenomenal earnings. You guys are saying that you can trade regular stocks through 4:15 now? I have yet to do that. If that is accurate, someone please confirm. Yeah, that's Dave. That's Interactive Brokers. And I have verified. Big D asked about trading over the weekend getting closed. I have verified that is possible for Interactive Brokers. I will say, and Dave might be in the chat here to verify, I will say Interactive Brokers, I've had a harder time with the fills. So I've had other trades that filled easily on Schwab and other accounts, while the Interactive Brokers didn't fill. They're also my highest fees. On top of that platform drives me nuts on the desktop. So there's some negatives there as I've tested Interactive Brokers. But the positive is that yes, you actually can get filled. They have a selection called fill. What's it called, Dave? Fill outside normal hours. Forget exactly what the condition is there, but it will fill. All right, I got to test this. Someone said that you can trade regular stocks. So you're telling me I could trade this 145, 146. I could add another contract right now. I have yet to do that on a regular stock, only indexes so far after 4 p.m. But I'm having multiple people tell me that right now I can trade it. Maybe do I need to do any? Let's see. Well, it doesn't have the extended market option here. Let me see if I agree to pay a penny more than the mid price if it would fill. All right, I think you guys are lying to me. I don't think I can trade this after 4. The underlying stock, obviously, I could. Well, maybe that's what when you said straight stocks, maybe you meant literally the underlying stock. Because sure, you can trade the underlying stock until 8 p.m. if you want. That's always been, not always, but that's been the case for a long time. But the actual options on stocks, I believe, right now are still stopped at 4 p.m. and it's only the index that you can trade till 4:15, which has been a nice adjustment. I've actually used that post 4 p.m. Opening and closing a couple times now, which has been nice. And then the pre-market's been great too. Like, for example, that AMD news came out yesterday, and I closed a big chunk of my AMD shares before the market even opened, which I'm glad I did because it sold off pretty much all day long. Only thing I wish I would have done is sold all my shares. But yeah, as far as I know, and it looks like maybe I'm getting some confirmation in the chat now, still just the indexes through 4:15 p.m., the options on the indexes. But folks, I imagine they're going to continue ratcheting that up. I think we're going to see some other stocks show up. And then eventually I think we're going to have, the 24-hour markets at some point. I mean, Hood's going to try to tokenize stocks, and that alone will open up the market conditions for those. So a lot of different opportunities there. All right. Well, folks, it is 4:05. I have talked long enough. Hopefully you enjoyed that rapid fire session. Hopefully we do get a nice bounce opportunity to quick buy the dip, get ahead of schedule on some of those trades.
Hey, can we pitch stocks after dark?
No, because you will be there. So I don't want anyone to show up. Yes. Okay. Stocks after dark. Sorry. I would forget that every time without you mentioning it. So thank you for that. We do have our trivia night tonight. Dave, what time is it?
9 p.m.
All right. 9 p.m. Eastern Standard Time. We have our trivia, over $1,000 in prizes, plus some fun questions, probably a couple that they're going to try to humiliate me with. Who knows? So Stephen and Dave will be there. I'll try to tune in as well. Looking forward to that. Hoping we have a ton of people, a ton of participation. I know Stephen especially has put a ton of work into it. Dave's going to show up and pretend like he put a ton of work into it. And should be a lot of fun. Just a way to kind of have some fun with the community. Maybe step away from the charts for a little bit and have some fun, answer some questions, get to know Dave and Steven a little bit better. So make sure you join that. That's 9 p.m. There's a link that Dave put in the chat there. Free sign up, obviously. Just throw your phone number in there so we can text you the reminder invite and take advantage of that. Dave, anything else I should mention about trivia?
I don't think so. Yeah, just to caffeinate and show up.
All right, cool. Well, then I guess the last thing to mention is we did that automated options special. If you guys don't know about that, that's kind of my flagship, how to hack bullish moves in the stock market, which, as you know, I'm a big fan of. A lot of what I've been talking about. How do you trade kind of a balanced in-between approach in this market condition? Well, this is kind of what I would suggest. So if you didn't get to watch that presentation, we will play it right now. And it has a ridiculous deal at the end if you guys want to take advantage of it. If you've ever considered tonight. Yeah, so it expires tonight. So if you guys ever consider joining me for automated options, well, you will not get a better opportunity than right now. No pressure, but if you want to take advantage of it, now is probably going to be the time to do that. And I'll see you on our next trade. Let me kick that off. I'll kick off with the good old profits performance disclaimer. You guys know the drill here. Obviously, no future earnings claim. This is based on the back test of when I first built this strategy, plus my live trading so far, including a really hot streak over the last couple of months. I mean, really, since we started, this strategy has been a consistent winner, about a 77% win rate with an average winner right around 48%. So that's that kind of middle ground I was talking about. We're not going for home runs. We don't need the market to rip 10% higher, but we're also not being defensive. We're being medium aggressive, giving the market a window to make a move. That's exactly the kind of strategy that I think makes a lot of sense for right now. Now, like I just said, what we are trying to do is hijack bullish stock moves. Okay. So as you'll see, same type of trade that, we've had 18 out of 20, average winner of 30+%. That's actually blended. That's not an average winner. That's average result. So that actually includes losers. Average winners around 50%. And no, we're not trying to pick the next Amazon, not guessing on what the moonshot is, not trying to pick what the next NVIDIA is. We're not predicting to Donald Trump. Actually, the way this trade works is as long as you open the position before the end of the week, just like we will this week, you have a shot to target right around $1,250 in a matter of days. But actually, that's not the best part. The best part is that unlike most methods, my favorite thing here, you don't even need to know when to exit this kind of trade. And I do mean that literally. To exit these trades, we're not staring at charts. You're not clicking any buttons. You're not waiting for an exit alert from me. Once it's activated, we sit back over that 2-week window and we let the trade do its work automatically. Like June 13th, you took the trade, set it up before the end of the week, could have packed up the kids and hit the road for a getaway like we do a lot. Check back, $1,250. A few days later, would automatically hit. Then the next week, June 27th, as long as the automated options were set, you could have been playing golf at Pebble Beach with your phone in your golf bag, ignored your brokerage account until you got home and found another $1,250, like I keep saying, in extra income automatically sitting in your account without even checking over those couple of days. Rinse and repeat. July 3rd, take 2 minutes, make sure the trade is set live, then maybe hit the beach with the family or just relax for a little bit. Whatever it is you want to do in your free time, that's really not the point. That doesn't matter. Regardless of who you are and how you like to spend your time, a few days later, that account would have once again hit a beautiful automatic winner, $1,037 in extra income sitting in the account. Now, before we get too far along, just to be clear, I'm not saying it's guaranteed. There's no instant income magic pill. Hopefully, you guys have been around me long enough to know that. Just like with anything, we expect winners and losers along the way. So for the next few minutes, as I always tell you, forget about becoming the next overnight millionaire. Financial freedom doesn't happen overnight. It happens bit by bit through the hills and the valleys, 1 week after the next. And with automated options, like I'm showing you, I think the idea here is that your trades can be a little less stressful, may make your life a little more enjoyable as those trades go to work. Now, if that sounds interesting, hang tight because I'm going to show you how these actually work and how to take advantage of the next automated option this week, giving anyone who follows along a chance to target $1,250, essentially hands-free. So welcome to Automated Options. If you guys have not been part of this before, you're in the right place. This is kind of what I would consider my flagship bullish approach, and I can't think of a better market condition than the one we're in right now. Now, if this is your first time joining me, my name is Nate Tucci. Thanks for being here. Despite being obsessed with the stock market and having some pretty cool success stories, including publicly growing my 10K account into over 50K as a test that we did in live Telegram, or crossing over $100,000 in my buy and hold account last year, my goal is not to be on TV talking about trading. You're much more likely to find me at the beach with my kids or at a Penn State game with my brothers than in New York City. But today, because of that style of trading, I've actually have more time and more freedom to do exactly those kind of things because of what I think is the biggest trading breakthrough ever. You guys were on my trading on Friday. You kind of already know the drill here. And it's not just me. Steve, very easy, $675. Looking forward to many more. Roger said 1,560. Awesome. David said 4 for 4. Started small, slowly increasing my size. And I want to show you how after just a few minutes of your time and a couple clicks inside your brokerage account, I really do mean a couple clicks, you can set up your very own automated options targeting extra cash week after week. Now, according to our testing in my live trading, we're averaging about $1,250 per winner based on a $2,500 account. So about a 50% average income trade every single week. There's an opportunity. Now, you've all heard me talk about why folks need more income than ever before right now, because inflation always hits the middle class and the lower class the hardest, right? People who own millions and trillions of assets like Apple and Nvidia, inflation doesn't really hurt them because it just makes all of their assets more valuable. So it's that second tier that inflation really hurts. And that's why we're seeing average savings accounts at the lowest levels since 2008. It's not a very good sign when things are being compared to 2008 metrics, okay? Credit card debt is at the highest level we've ever seen. So why are savings at the lowest levels and credit card debt at the highest levels in